What's up, millennials? Are you looking for a company that is one of the leaders in industrial technology worldwide? Then I might have the company for you. Today we're going to talk about ABB, which is a European company with a lot of products, and also if you're into EV charging, you might like this company too. In this video we're going to take a look at ABB's products, the valuation, and some technical analysis. So let's do it! ABB is a European company that has a lot of products and services. We can see that they are mainly focused on the industrial technology, and here we can see just a list of all the products they have to offer. It's quite an insane list. They basically have everything from these little fuses that you can basically see in a lot of devices up until all the way this beautiful robot over here, which is a collaborative robot called Yumi that can help you out with all kinds of tasks. We can see that the ABB group, which is based in Switzerland, by the way, basically is focusing on 4 business areas. We can see that that is electrification, motion, process automation, and also robotics and discrete automation, as they call it. So the majority of their revenue, 44%, as we can see in this investor presentation, comes from electrification. Then we also have 23% which comes from motion, and then 22% from process automation, and 11% from robotics and discrete automation. So if you then scroll down a little bit, we can see the first sector, electrification. About $11.9 billion in revenue comes from this portion of their business, and this has to do all with, for example, things like renewable energy, things like smart buildings, but also data centers. If we then scroll a little bit to the downside, we can see the second one, which is motion. They have $6.4 billion in revenue in the motion industry, as they call it over here. And the motion industry basically is based on motors, generators, but also traction systems for trains, for example. Then we can also see that the third one, which is process automation, they get about $5.8 billion in revenue from this sector. And this has all with regards to, for example, marine and port solutions, quality control systems, but also analytics solutions. And then the last one is, of course, robotics and discrete automation. And this actually produces $2.9 billion in revenue. And this sector has all kinds of things like these beautiful robots we just have been taking a look at, these Yumi robots, for example, but also machine automation. And as I said in the beginning of this video, if you're into EV charging, you might also like this company because ABB has a pretty large sector or a pretty large business within their entire group, ABB group, of course, that is focused on EV charging. Now, they might actually carve out this piece of business about EV charging because they might want to do an IPO with that sector, with just the e-mobility part of their business. And they're going to take that decision at the end of this year. So that is based on EV charging, and according to this interview, the CEO of ABB says that they had a 50% compound annual growth rate in this sector in EV charging over the last couple of years. As we can also see from this interview, they have already installed more than 400,000 EV chargers in 85 markets. And here I was thinking that EV Box had the most amount of chargers, but okay. But he also said at the same time that they need to do many acquisitions, and something very important for this company is acquisitions. We're going to talk a little bit more about that later on, to keep the leading position. So they need to acquire a lot of companies to keep the leading position in the EV charging phase, of course. So now we do know, of course, that EV Box, the whole merger with the SPAC TPGY, has been pretty much a fiasco so far. We don't know for sure if the merger is going to happen. I still think it is going to happen, but if it doesn't happen, if EV Box is not going to merge with TPGY, who knows, maybe we're even going to see a merger with ABB e-mobility, and then they could become the ultra giant of EV charging, especially in Europe, but probably also worldwide. Let's then now take a look at the Q1 results of this company, of ABB. And for this company, most numbers are actually in dollars, so I'm just going to be using dollars for these financials. But do keep in mind that this company is based in Switzerland. So we can see that in Q1 they had a strong start to the year, as they called it. They had $6.9 billion in revenue for the entire quarter. So if you annualize that, that is about $28 billion. And keep in mind, this company has a market cap of about $66 billion. So then this would give a price to sales ratio of almost 2.4 more or less. Now, if you compare that to growth companies, you're likely going to say that is very cheap because a lot of growth companies have price to sales ratios which are like 15 or higher or something like that. But these kinds of companies like ABB, which are focusing more on the industrial technology, more like an industrial company, these companies often have a very low price to sales ratio, and usually the investors look a little bit more at the PE ratio instead. Now, one of the problems with ABB is that the revenue has been kind of decreasing over time, because we can see that in 2017 they had about $34.3 billion in revenue. 2018 that went down a lot by to $27.6 billion. 2019 was basically the same, so about $28 billion, and then in 2020 they had about $26.1 billion. So that is quite annoying to see that the revenue is declining over time. And as we can see, according to this article on Seeking Alpha, we can see that the revenue has actually nearly halved from 2013 all the way to now 2021. From first of all $42 billion in 2013 to $26 billion in 2020, as we have just seen. So as I've said before, the PE ratio might be a little bit more important to look at than the price to sales ratio. And according to Yahoo Finance, we can see that the PE ratio over the trailing 12 months is about 13 right now. Now, usually below 20 is pretty good. But again, according to this article on Seeking Alpha, there are some trends in the company that should give us pause before we move on, before we actually start investing. Because we do see, according to these tables over here, that the earnings per share have been coming down or have been staying flat a little bit over the last couple of years. Here, and it might be a little bit small to see, but here in 2011, it was $1.53 earnings per share, and now it is $1.29. So it has been coming down, as you can see in these bars over here, from 2011 until right now, the last 12 months. And we can see basically the same thing happening with the free cash flow per share. We can see, first of all, that it went up from 2011 all the way up to 2016. That is this bar over here. But then from 2016, it actually went down quite significantly over the last 5 years or so. And one of the reasons could be the following, because it kind of looks like they are swing trading companies, if you will. Because on the one hand, they are acquiring more companies to approve this company or these companies. And on the other hand, they are also selling companies to take profits from that. So that is actually very interesting. It's not very often that you see something like that going on. And according to this article on Seeking Alpha, which is a different one, and by the way, I'm going to put all the links to these articles in the description as always, the management has identified a few major business units of ABB, like turbocharging, mechanical power, power conversion, as sale or exit candidates. So they might actually get rid of these business units. Now, the thing is that these are actually 3 of the highest margin businesses that ABB has. So it's quite interesting to see that ABB is getting rid of these high margin companies. Also keep in mind that ABB is a dividend company, so this company does provide you a dividend. And that dividend has gone up in absolute terms from about 84 cents in Swiss francs in 2007 all the way up to 80 cents right now in 2020. That is, of course, in absolute numbers, because if we take a look at the percentages, we can see that it basically has stayed flat for a long time until we saw the COVID situation, of course. Then it went up because the price of the stock went down quite significantly, so that is why the percentage seems to be quite high. But right now it has rebounded, or it has actually completely broken down, and now it is just 2.57% compared to more or less 3.5% in the last decade or so. ABB is also working currently on a share buyback program, and this is a program which they launched recently on April 9th of this year, 2021, through March 23rd of 2022. Now, they are going to buy back about $4.3 billion in shares, and this is about, as we said before, the market cap is about 66 billion, so this is about 6.5% of the current market cap. With regards to the guidance for the full year of 2022, the revenue guidance has been increased released by the CEO of ABB. But according to this article on Seeking Alpha, we can see that the CEO, the current CEO, also worked at a different company called Sandvik. And here he had a fairly conservative guidance all the way, usually at the start of the year. And then what he did was upgrade or revise that number, that guidance, as the year went on. So this is definitely just a strategy that the CEO of ABB could be employing right now. And then one of the last things I'm going to look at is the price targets. According to MarketBeat.com, the current price target is around $35, which is the consensus price target for ABB. And right now we are very close to that number, around $33.64. So before we get into the charts to do some technical analysis on the chart of ABB right now, let's first talk a little bit about the ticker symbol, because this is a company that is listed on the Swiss Stock Exchange under the ticker symbol ABBN, which we're going to take a look at right now. But it's also listed on the New York Stock Exchange under the ticker symbol ABB. We are, however, going to take a look at ABBN because that one has a little bit more volume, so it's a little bit easier to analyze. Okay, so right now we are on the weekly chart of ABB, and we can see this price action from basically 2008 all the way up to the price action right now. And we can see that the price action has stayed relatively flat. It has gone up a little bit. It has stayed more or less around this line. You can see that it has gone above this line, around this line, and below this line too. And right now we have quite a lot of divergence between this line and the current price action. So we could definitely go down a little bit over time. Also, if we take a look at, if we get rid of this line for a second, and if we take a look at the white line over here, this is the 55 exponential moving average on the weekly chart right now, of course. And that line is quite important because, as we can see, if we go back in time, we can see that the price action has always stayed around more or less around that 55 EMA, around this white line over here. And currently also here we see quite a lot of divergence, a lot of difference between this white line over here and the price action. So we could definitely in the future go down a little bit more to come back down to that 55 EMA. And if we would go back down from the current moment, then that would be a decrease of the price of about 13% more or less. Then let's also take a quick look at the indicators on the weekly chart. For example, the RSI, we can see that the RSI is relatively high right now. We can also see that the EMA on the RSI, which is this white line over here, is relatively high compared to the previous years, because we can see that the white line over here is basically the highest it has been since 2007. So about 14 years of price action, and the RSI, the EMA on the RSI has never been this high. And also if we go to the MACD for a second, we can see that the MACD, which is this blue line over here, is quite significantly high. And this one is also basically the highest since it has been in, since 2008. So again, that is also 13 years since the EMA, or since the MACD, of course, in this case, has not been this high. If we then scroll into the daily time frame, we can see some resistance going on around 30 Swiss francs and 85 cents, which has been tested 3 times, 1 time, 2 times, and 3 times, and now it is coming down a little bit. Also, if we go to the RSI on the daily time frame, we can see some bearish divergence going on the RSI, basically meaning that the RSI is making lower highs, whereas the price action is making higher highs. And also, if we go to the MACD on the daily time frame, we can see that the MACD is still trending down. This MACD, the blue line over here, is still trending below the signal line, which is this orange line over here. So all in all, if we combine all of the information, if we combine the weekly chart with the daily chart, and we also take into account the valuation of this company, but also the analyst ratings, then it might be a good idea to wait for a pullback, but that is of course not financial advice. So ABB is definitely a solid company, a very diversified company, but according to the technical analysis, the valuation, and also the analyst ratings, this company might be fairly valued right now, or potentially even slightly overvalued. Now, if you're very much into growth stocks and EV charging companies, then you might want to look out for the potential e-mobility IPO, which is coming out of ABB potentially later this year, or at least they're going to make a decision later this year, which could be a big competitor to ChargePoint and also EVBox, which might merge with TPGY. Now, before you leave, I'm very much looking forward to your opinion about this company too. What do you think about ABB? Let me know in the comments. And with that being said, thank you very much for taking the time to watch this video, and I hope to see you in the next one. Bye-bye!